Hey, Money, it's good to have you with me today. What's going on, Newt?
I'm doing well, Fi.
As you can see, this is my frat brother, Monte Brown. I'm happy to have him on the show today, and we're going to jump right into it. So, Monty, first and foremost, congratulations on being the president of TRAB, and just kind of give us a little background of what you're going to be doing as president and what your goals are for being the TRAB president.
Okay, let me first explain what TRAB is.
Okay.
TRAB is the Texas Association of Real Estate Brokers, and we're affiliated with NARAB, which is the National Association of Real Estate Brokers. Mm-hmm. We're a black trade association. We're in well over 120 cities. I'm currently now president of the state of Texas.
Congratulations.
Thank you. Mm-hmm. We have 7 chapters here in Texas. And so with that being said, the goal is, or my mission for the chapter for my mission for the organization is closing the gap. Closing the gap, Texas 1.
Okay.
Closing the wealth gap, Texas 1 is my mission for the 7 chapters. Mm-hmm. With that being said, I'm going to utilize the chapters where our job is first of all, our motto is democracy in housing.
All right.
So what we're going out to do is obtain, maintain, and retain, mm-hmm. And repeat home ownership for individuals out here looking for homes.
Okay.
So most of our community is we're right about 42% of home ownership. Mm-hmm. So with that being said, that's for black home ownership. And our mission is try to educate our community as far as trying to keep our wealth in our families, because we're losing it at an all-time rate.
Okay. Well, Monty, everybody talks about, buying a home and things of that nature, but very few people have the financial ability to do that. To kind of give some insight on some of the things they need to do to accomplish that and some of the steps they need to take.
A lot of times, it's still an American dream as far as home ownership. So with that being said, you want to definitely keep your credit up. Another problem that people have is the down payment when it comes to saving the money. Mm-hmm. There are programs out here to assist people mm-hmm. in funding to purchase a home. Mm-hmm. Most people got to just connect with which might say it's a realtist, which mm-hmm. you're also part of.
Exactly.
And we'll hold your hand, navigate you through the home buying process.
Okay. So kind of walk people through the steps. As a realtor, who is probably one of the first people a realtor should reach out to in the home buying process?
The first person a realtor should reach out to would probably be a lender, but my suggestion is to reach out to a real estate professional. Mm-hmm. That way he can give you an option of mm-hmm. 3 different real estate professionals based off your needs to fit you and your family is toward the home buying process. Just because one person tells you no, mm-hmm. there may be another lender that can assist you in the process. Mm-hmm. It's like when you start going through the process of home buying, you need somebody to hold your hand and navigate you through that process.
Exactly. And I'm kind of interjecting here because, I'm an insurance guy, and I love to ask realtors that question because a lot of times I tell realtors, me being an agency owner for insurance, I always suggest realtors also call the insurance agent up front. And, we worked on some things as well. And you probably forgot to say it because you do a lot of times call me right off the bat, because one thing that people forget to do is call the insurance agent on the forefront for a couple of reasons. One, to make sure, they look at the realtors looking in the right area, because, we've worked on deals in the past where
right.
somebody was looking at a particular area, and then we ran at insurance. We find out, okay, we got to pivot at that P word. We got to pivot. And got to look somewhere else to go somewhere else, and we'll do that. And then, of course, some people don't understand the debt to income ratio, because me being an insurance agent, I work closely with you, the lender, the mm-hmm. title company, and I see a lot of insurance agents don't understand that. So that's key. And then 2, we have that clue report as well.
Right.
So it kind of gives that background information from that standpoint also.
Yeah. So with that being said, based off of just communicating with you, when I have a client looking to purchase a house, when we're up on a contract, an option period, I make sure I have to do a rule of thumb to refer out 3 mm-hmm. when it comes to insurance people.
Exactly.
I put you in rotation along with 2 other mm-hmm. insurance, and they go from there to select.
Exactly.
So that gives that individual an opportunity to terminate and know up front what the insurance or cost is going to be. And also, mm-hmm. once again, get that clue report with that house, so they'll know if the house had fire damage or there's been a claim against the roof, mm-hmm. which can affect the cost of that house as well.
Do you think people, when they're looking for a home, focus too much on the monthly payment instead of the true cost of what the home is actually going to be?
Most people look at the monthly payment. They're focused on, I want my payments to be this much. they're not so much looking at they look at a house can be like a buffet. If you don't get pre-approved for a certain amount, and that's before I even take you, I want to make sure I know what you qualify for, because if you see one house at a certain price, you're stuck on it. So it's best to know your buying power up front.
So let me ask you this question. I know I have these conversations with customers. Like I said, I work with you and some of the other realtors and mortgage people enough to be dangerous. But one thing I find out, I tell customers a lot of times too, even when I'm doing the insurance, sometimes I know they have that range for what they qualify for. A lot of times I tell them, just because you qualify for $500,000 don't mean you need to get $500,000. What is your thoughts on that?
My thought is pretty much on it. I tell people to stay within your means, because there are extra costs that comes up along the way when you become a homeowner, and you want to be able to pivot.
Exactly. So do you think schools should be teaching homeownership, credit, and budgeting?
In a perfect world, they should, but they really have made, my personal thing, they've made us consumers, where financial literacy, they feel individuals should get it on their own.
So for the first-time home buyers, what do you think are some of the other things they should think about before purchasing a home?
Before they start purchasing a home, they should consider the location. Number one, matters. Schools. Number two, also consider how long they plan on being there if they decide to purchase it well. Knowing where you're located in a time frame, because you're going to have to be in the house at least probably like 5 years if you decide on selling it.
Gotcha. So give me a thought process too when it comes to, I see sometimes people looking in certain areas, they don't think about, what's what I'm trying to think we were saying, from the standpoint of when it comes to home ownership, thinking about the insurance standpoint. What are your thoughts about when, they're looking at an area where it might be a flood type situation? Do you try to steer them away from that, or what are your thoughts on that?
Well, right now with certain areas, it may be they just letting them know they have to get a flood insurance policy. It's going to change their monthly payments as well. If they're looking for a certain monthly payment, and it has a flood insurance, that means there's an extra cost involved.
Right.
And which means they can mess up their debt to income. So there's something to think about when they fall in love with a house. If it's you got other things besides flood insurance, they can mess up your policy. You got PID, mud taxes. PID and mud taxes can also formally mess up the monthly payment as well.
So it kind of explain what PID and mud is, so people understand what that
PID is public improvement development, and mud is municipal urban development. And when roads and utilities come into place, these are costs involved that the city implement on individuals that's purchasing a house. I think mud is there, if I'm not mistaken, is there up to like 28 years. Once this paid off, it's gone. But the PID is there for the life of of living there in the house, off that community. So you help develop the cities, with the roads and utilities and all the things there.
So I know I'm gonna kind of go back to what we were talking about a few minutes ago. You had mentioned something about home ownership being 42%. With that being said, explain to people what that actually means. 'Cause I've heard, I've known too. They said it's 42%. I've heard, I've even seen data as well. And I want you to explain it to our audience why it's like that. But our forefathers, people like in the 40s, 50s, and 60s, had a higher home ownership than we do now. But what are some of the pitfalls that are causing us not to be in at 42%, and we actually declined and going back? Kind of explain why that's the case, and if you got to get technical, so we can know where we're at from that standpoint.
Right now, I'll say this: that we're more educated. Blacks are more educated now, but we own less in home ownership now. Part of the reason is debt to income. That plays a factor in it. Families have also, not having a family has implemented home ownership as well. And number three, people have gotten caught up in being consumers, and they don't think that debt to income has played a factor in it. Then you throw in student loans, it plays a factor. And the older generations, they had more the silent boomers and baby boomers. I mean, silent generation baby boomers. They understood where they didn't have a lot of down payments, so they had understood saving. So they had their money, they saved to understand home ownership, where a lot of us along the way think about it when it's too late, where no one, somebody should have told me when they went to college, and all of a sudden they got the student loans start racking up, and it became a debt to income problem, or someone married someone. If they try to do an FHA loan, that income, that spouse's debt can affect the breadwinners as far as purchasing a house too.
Right. So, I'm gonna let you explain this to our audience as well about the SHEBA report. So I know the last time they had the SHEBA report, and you can tell them what the acronym means and everything from that standpoint. But one of the things they showed, some of the data showed that our Anglo counterparts can have income of $50,000 to $60,000 and get a mortgage before somebody who's African American or a person of color who might have $150,000, income. What do you think some of the reasons that happens?
Well,
Keep it 100 with us.
In so many words, some things that still exist as far as discrimination.
Okay.
The acronym for the SHEBA report is the state of housing of Black America. A lot of Black Americans have been denied for mortgage reasons, and I think a lot of this is trauma to a certain degree. Understanding how denial of understanding ownership. Most people don't like to talk about their credit, and then it's a gun shy of asking for help. When it comes time, and then people get denied, and then they just let it be. They don't tell anyone. It's easy for us to soothe ourselves with fancy cars, nice clothes, nice shoes, and even rent to look a certain part. But that trying to purchase a home really just takes you being humble and really being disciplined to go towards the direction of home ownership.
And see, I always try to do my part as an insurance agent. Like I said, I'm not your average insurance agent. I kind of go beyond the pale of what insurance agents are supposed to be doing. And
agreed.
Especially when I see people, I try to help anybody. I don't care if you're white, black, brown, whatever. I try to help everybody, but especially in my community. When I have people call in, I actually talk to them when they talk about renting. I go beyond the pale and start talking to them. Like, say, I understand you're renting. I say, I ask customers, what are your goals on moving forward as far as home ownership? And then one of the pitfalls I hear people talk about sometimes, they like, well, I don't want to have to worry about cutting my grass. I don't want to have to about doing maintenance and things like that. And I always tell them, don't worry about that, because I see people, I've talked to people, and I'm doing renters insurance. These people are paying $1,500, $1,800, $3,500. They pay more for insurance, for renters insurance, for a month than I'm paying for my home insurance.
A lot of people are looking at convenience, and we're in a world where people are consumed with convenience. They don't want the things that come along with owning a home. They have to sit here and they don't want to repair for the AC unit, but there are things set up where the insurance costs that can cover those things. Like you can get a home warranty, and then like if the lawn needs to be cut, they can get someone to cut the lawn. Those things people miss out on when they buy a home, but that's something you can definitely factor in.
Yeah, that's the biggest key is just education. A lot of times, just having people to understand what to look for, what to do, and I actually try to provide those resources for them as well. Because I'm kind of skipped. I know you're the president of TRAB. You've actually the previous president of DAR, the Dallas Association of Realtors, as well.
Yes.
But let them know what you do. You did as the president of DAR as well, and what the initiatives and goals were for that particular organization. A division of NARAB.
Okay, so DAR which is just Dallas Association of Real Estate Brokers.
Right.
It's the local chapter for Dallas, which is also affiliate of NARAB. I consider myself, I was the president for DAR or NARAB Dallas 2020. I consider myself the COVID president. So, which means we went into a world of no touch environment. So we zoomed everything. Right. So, but a lot of realtors were kind of upset when that happened. So it was kind of like we still had to go out and use social media to get to our individuals, consumers, to educate them still. So that's something we did. We used a lot of social media, flyers, Instagram, LinkedIn, and just to get in front of people and educate them, hey, it's okay to buy a house. And realtors became essential workers to assist people in still buying homes because there was still a demand out there.
And I'm going to switch gears a little bit, too, talking to people who are realtors and people who might not even be realtors. So let's talk about commercial real estate. Like I said, I'm pretty adept in a lot of these things. I'm kind of dabbling in some stuff
Yeah.
myself. You know, we kind of worked on some stuff as well together. But talk to people about commercial real estate, and even talk to from a realtor standpoint, because I know I hear some realtors and realtors. In fact, let's back a little bit. Tell them exactly what a realtor is, so they'll know what the difference between a realtor and a realtor.
Okay, a realtor is pretty much set up where we're not allowed to be a part of the National Association of Realtors. So in 1947, 11 men, 1 woman, which is 12 individuals, came together to create the National Association of Real Estate Brokers, and we claim ourselves as realtists. So it's still a dire need after 1947 as far as the educational piece to focusing on the culture, which is Black Americans, as far as toward home ownership.
Right.
It's still a point of educating us. Financial literacy is a key component of understanding how to own a home.
And I'm actually going to take it a step further. Tell them what a realtor is. A realtor is anybody who touches the home buying process. Naturally, it's going to be a realtor. Naturally, it's going to be a mortgage person and title. But it could be anybody. It could be somebody like myself with insurance. It could be a home inspector. If somebody takes...
It's a bank. Realtors are bankers. Realtors are plumbers. Realtors are contractors. Realtors are individuals, business owners.
Homes.
Yes.
Yeah.
So it's a lot of people that go up on it. We consider by being in depth with being a realtors.
Exactly.
Because we want everybody connected. When you are in your home, we try to feed everybody to really just understand that we have a pool of network here to assist you when things go wrong.
Exactly.
So
I'm going to kind of go back again. So going back to the commercial real estate, tell realtors, I know a lot of realtors and realtists focus in on home buying and things of that nature, but tell them as well, there's another revenue stream that pours and probably even trying to dabble into commercial or give me your thoughts on that particular situation.
Well, commercial and residential is a little different, and it's a broader scale of knowing the dialect and the terminology of commercial. You have warehouse, industrial, you have land, and then you have also retail. All of them have a specific dynamics when it comes to commercial. Residential, you have a whole avenue, whether you're going to work with buyers, sellers, listing, short sales, foreclosure, REOs. It's a whole dynamic, and I've been doing this since for 25 years, 26 years, and I've done a little of everything. And real estate is like one of the members of the association name is Andrea Cooksey. She always say real estate is a highway exit. At one lane, you're going to exit sooner or later. So we always have something that we're doing to continue to drive, because the real estate industry is constantly changing. Right.
And like I said, me being an insurance agent, I do mostly property and casualty, which is your home, your auto. But I started to pick up and doing more and more commercial things as well, because I do commercial insurance also. But one thing I'm going to talk to realtors and just home investors as well. We're going to talk about home investment as well. But people, when they're doing that, I tell realtors to make sure they tell their customers, if they get an investment property, to do builder's risk insurance. Because a lot of times when you go to these sites, you have your materials and stuff out there. You go there and you come back the next morning, your stuff is gone. And as an insurance agent, that's why I preach to people. If you're doing investing, if you're doing flips and things like that, make sure you have builder's risk insurance, because that way it covers things if that were to happen. So if your wood is gone, or you got your AC unit out there, you come back the next morning and it's gone, you need to get that. So I want to kind of emphasize that as well. But talk to our audience too, from a realtor standpoint, and from just a general person out there who's listening as well, because you have a lot of people who come to our meetings who technically might be a realtor, but we do encourage people who just want to learn more about investing to come to our meetings as well. So kind of talk to them about investing and tell them about what you had with your organization, SALT.
Okay. Well, my organization was an organization I created. SALT was an organization I created when I was local board president. It was birthed really where we got seven. At that time, it was seven real estate professionals, and we created SALT, and we went out and kind of.
Tell what SALT stands for.
SALT stands for is purity. It's the acronym, but it's pretty much purity for the grain of salt. Means it's pure and it's whole. That's why we created the name.
This brother getting deep. I'm gonna go ahead now.
So it's biblical is the reason why we created the name SALT. But the initial goal was for us to try to level our playing field as far as information.
Mm-hmm.
Me and the group constantly met once a week, and we shared opportunities.
Mm-hmm.
It can be anything. We also shared information on how to get lines of credit, who to talk to, and then the lingo to get those fundings.
Mm-hmm.
Because most people that are business owners, they don't know what it takes to get funding.
Right.
They're set up all wrong, and so they've gotten denied as business owners. So when we created SALT, whether someone was good at developing, someone good at, like, I'm pretty much a financial person, and I know how to the lingo of bank because I bank with everybody.
Mm-hmm.
I knew how to navigate them, tell them you need to do this, this, and this to get the funding.
Mm-hmm.
And so when it came for an opportunity, we all brought something to the table. So, and that's how we were able to, make a certain income doing it. So that was the benefit of creating that group. So it's something I'm gonna bring to, going back, I'm gonna bring that to the state where we do the same thing again as well.
And see, that's the beauty too, because we do have 3 organizations here in the Metroplex. We have North Texas, which I'm on the board for North Texas. I'm a general member for the Dallas location chapter as well, and we do have a forward chapter. And one thing I want to really emphasize, like I said, once again, not just for realtors, if you're in mortgage, you're a lender, plumber, anything else, I really want to encourage people to join these organizations, because one thing you're finding out, and I don't want to get too political here, but like I said, we're under attack as a people, you know, and, sometimes I think we get too comfortable as a people. When I'm talking about people, I'm talking about our African-American community. We get a little comfortable.
Complacent.
That's right. We get complacent. I think this is a time right now where we do need to kind of pull ourselves together and, tighten the battens, the hatches, and kind of bring it in. Because that's one thing I noticed about some of the other ethnicities and nationalities. They come together, they bond. And I kind of want us to get back like it was too, like in the, back in the day.
The crazy part about us is, the way I look at it is, we work better up under trauma.
Yeah.
I have no idea. That's when we merge as a culture. Is trauma brings us together as whole. The Willie Lynch syndrome still sits well upon us. So even when I look at my group SALT or any investment groups that I've been a part of, I think of it like a gym membership. Meaning that they always say blacks don't trust each other. We don't get along this, we don't get along that. But at the same time, when it comes to financial means, we did it with Black Wall Street. We did it, Black Wall Street, Tulsa, Oklahoma. But we did it in Mississippi. It was a Mount Bayou. We have all types of cities that black cities have had, but they got washed away or roads got ran through. And so psychologically, that trauma has passed on. So you have to kind of do a bait and switch, feed us slowly on certain stuff when it comes to understanding how to collectively do crowdfunding. Most of us want instant gratification. Right. Wealth is not accumulated instantly. So, and I sat on the board for the Asian Real Estate Association for 6 years, and a lot of it's their mindset. That's what their mindset is, just tired of like opportunities. They the joke when I was on the agent board, don't sell an Asian person one house, sell them 6 houses, sell them 3 houses. And they understand passive income. That's something we don't even come in our vocabulary.
And that's why I said I'm trying to get to a point where people, when I do the financial literacy class or first-time home buyership classes, which I do when we do them, I do them for free, because my thing is I'm big on education. Like I tell people, I believe in education and consultation. And I tell people all the time, I'm not a salesperson, I'm a consultant. Because even if somebody comes to me to get a quote, or if I do a policy review or something like that, you don't even have to come to me. What I want, don't get me wrong, I want your business, but if it doesn't make sense, I'm going to let you know. Stay where you are, and I'm going to tell you how to tweak what you have right there. Because most agents, if they're not getting the business, they be like, hey, Monty, thanks for the opportunity. I hope it works out for you. But with me, even though I'm not getting the business, I'm going to educate the person on what the policy they have, because most people insurance agents don't explain the policy to them. And this is one thing I really emphasized when I did this most recent presentation I did for some mortgage people and realtors. That's one thing I talked about too, is home coverage, because a lot of people get so caught up in just price. Don't get me wrong. My wife says I'm cheap. I say I'm frugal, but price is important, but coverage is more important, because I've seen so many situations where, you know, you got to be careful with the realtor. You up board, you straight, you're, you know, a God-fearing man, and you're going to do what's best for the customer. Some realtors out there, they try to get paid, you know, and you know, sometimes, not everybody, don't get me wrong, we got a lot of great realtors out there, but it's like anything else. You got people out there looking for their pockets, so you have to be careful from that standpoint. But I tell, when I do education for NARAB and TRAB and these different organizations, when I do these home buying seminars, I even tell people, make sure you have the right coverage. I always tell people, don't save a few dollars to lose a few thousand. And people do that all the time. I had a situation like that just recently, you know. It's actually on the auto side where I told the customer, I said, hey, why don't you get roadside? Roadside is $6.09 a month. You know, I had no accident. It's not a big deal. Literally a week later, I should have listened to you. Had an accident where they could have got and then they didn't get the rental either, the rental coverage for the car. So those two strikes right there. For $6.09, they could have had that, and for a little bit more, they could have had the rental, and they spent more for one tow than that whole policy costs. Wow. You know, and that's what's key. That's what I tell people. And sometimes people do that with the home insurance as well. You know, I take my time to explain deductibles to them. You know, 1%, 2%, and trying to see what their goals are. Now, some people understand how deductibles work. I make sure they understand it. And if somebody comes to me with something I think is out of the norm, if they can give me a legitimate reason to why they're doing it, an educated reason, I'll be like, okay. If they don't, they say I'm just trying to save money and they don't understand the ramifications, I'm going to tell them that as well. And that's what I love about you. You know, you send them to me like, Chris is going to explain everything to you, you know, the good, bad, and the ugly. And I've had people tell me sometimes, they say, Chris, I thought you just want me to be your customer, because I'm hard on people. I'm going to give you what you need, not what you want. And if you want, don't match up to the need, I'm not going to put somebody in a precarious position, because I want to be that agent and that person. That's what I love about you. You're not just trying to get them in the house, Monty. You're trying to keep them in the house, and that's what we preach with.
That comes in the point of retaining.
Yeah.
You know, obtain, maintain, and retaining, and we repeat all about the process. And the thing about you, Chris, is you know, you believe in playing sowing seeds. You are a relationship insurance person. I'm a relationship realtist. And most people are transactional. Transactional means once the deal is done, I'm done. And I believe if you're going to survive in this industry, you it's formulate relationships. Right. And that's how you sustain your people, and making sure that when something goes in the house, they have access to you. And most people said they don't want you accessible to them, because that's not them. It's like, hey, I did my part. But being a relationship real estate professional, you are constantly sociable. I mean, attainable, where they can really just talk to you. Right. You're accessible in so many words, and that's the point of staying in this business. People that are accessible can sustain, and those who don't, actually, they go away. And the key too, what you just said, relationships, not transactions. You like me, because I know I've gotten customers from you who they refer their friends to you. The same thing with me with insurance, you know. And that's the key to people as well. Be relational, not transactional, because in this business you want repeat business. Right. So don't be transactional. Usually it's gonna be one time. It's one time. They're gonna send their mama, their papa, their friends. Right. You know, and that's all. You're doing it because you're being genuine, but they will literally do that without you even asking, because I follow up with customers. Even though they've been with me for a while, I periodically go through my book of business, and I go just randomly call people up, you know, and I'm a little different too. Most agents, I know sometimes these rates go up and everything, and I'm proactive, and don't get me wrong, I don't ever want to lose any business, but I don't want my customer being in a precarious position. So if I see it goes up pretty significantly, I'm going to let them know. Don't want them to leave, but at least I want them to have the opportunity to make sure they can do what they need to do from a financial standpoint, because I want them to be in a bad situation. Right. Yeah, but, you know, with the market change and insurance going up, people are really just, you know, they're cringing up at everything. So you one of the first ones that know it's the market shifting. And, you know, as far as you connecting with your clients, that's part of the business. Right. If you want to sustain, once again, you have to stay in front of your clients. Once they touch you, hopefully they do refer their family members to you, their friends, and as well as whoever. And that's just following up. Something simple as being accessible, talking to people. that's what this was this business is about for me.
Exactly. And I'm kind of explaining too. People ask me all the time, insurance is pool risk. I'm going to tell what pool risk means. Pool risk means it could be a customer who never has a claim ever in their life. But pool risk means if somebody in the area where you are having problems, even though you're not, because it's pool risk, unfortunately yours is going to go up as well. So I have to explain that to people. I mean, I'm an insurance agent. I don't get any discounts for being an agent. People think I'm an agent. I get discounts. My stuff, sometimes goes up just like everybody else's. I got to look at my home policy. In fact, my wife is like, dang, what's going on? I got to come home and answer questions. I got to come home and answer questions, So,
yeah.
But it hits me too. So, people say empathize and sympathize. I can empathize because I'm going through the same thing a lot of other people are going through.
Everything's going up because we're in Texas. These storms are beating everybody down. The storm damage and the hail shoe,
That's what's causing it. People don't realize that because in Texas, it's not if, it's when and how bad it's going to be. And we get hailstorms all the time. And technically, hailstorm is usually March through June, but we'll get storms in July, October,
wind
November.
Damage. Hey, I filed several claims. I'm one of those ones with them high rates. So I
remember a few years ago, and I talk about this all the time, when we had that big winter storm back in 2021, when we had that big freeze, it was sub-0 degree temperatures and stuff like that. And I always ask people, do you remember what happened a week after that? They said, what happened a week after that? I said, we got ice again. They said, ice again, but they said the temperatures was sub-0 degree literally that week before, and that very next week the temperatures were in the low 80s. They said, what you mean we got ice again? We had a hailstorm. I had customers who had to file 2 claims. One, because of the freeze, because of the pipes burst and things.
Then water flooded and all
that stuff that's standing in water. And the very next week, some of those same customers got hit with hail the very next week. So they found another claim. It said ice and tube went from freezing rain and snow to hail.
Yeah, only in Texas.
Yeah, it's always happened in Texas. I said, only you have to in Texas. So you just got to wait to see what's going to happen. It's always going to change from that standpoint as well.
Yeah.
Yep.
Yeah, I agree. So, it's just experience. Some of the claims I have to make, or even talk to clients. They have to file a claim. Just making sure they have the right deductible in mind as well when this damage does happen. So,
and I'm gonna tell you what's important to the audience as well. Make sure when you file a claim, at least I tell my customers this: call me, don't call the 800 number, because people, like you just said, which is key. And there's 2 reasons I tell people to call me first. Don't even call the insurance company directly. Because you call the insurance company directly to file a claim, and one, if you don't meet your deductible, it's going to be a zero pay claim. And people, what do you mean by zero pay claim? It means the claim is still going to be registered on your record, even though nothing was paid out, because insurance companies look at frequency. That's number 1. But 2, you have to make sure it's a covered loss as well, because if it's not a covered loss and you file a claim once again, that's going to be the situation. So I always advise my customers before, call me first. Then I'll tell them reach out to, if it's hail damage, call a roofer or contractor. Have them take a look at it. If they say, yay, it's enough significant damage to file a claim, have them to call me. We'll have a discussion, then I'll file it. If they say no, we won't, because I don't want people to be in that position, from that standpoint.
Where now they're when it comes to insurance coverage, their policy is going to be higher because they filed a claim.
Mm-hmm. Exactly. So those are the kind of things that you got to look at from that standpoint. I just try to really educate from coverages to make sure you have the right coverages and stuff like that, because, normally I try to keep people at a, 1-2% deductible. I had some people, if you are shopping, I don't care which company you're with, because your rates have gone up, make sure you look at your policy to make sure you have the right deductibles. I had a customer call me the other day and said, Chris, I'm getting ready to leave you. And I said, hey, I understand. But the first question I asked that person was, what is your deductible? I don't know. I said, send me the quote they did for you. And I looked at it, and they had a 5% deductible.
Wow.
And I said, do you realize what's going to happen with that 5%? Because that house is about $500,000. I said, that's a $25,000 deductible. What? And I said, that's why it's cheaper. But then mine was at a 2%. And even at 5%, they were only just a few $100s less, but they didn't realize that. So if you're shopping, if it looks good, it smells good,
it may not be good.
It may not be good. You want to make sure you definitely check to see, make sure you're comparing the apples to apples. I see that happen all the time,
Yeah.
Now, of course, if is apples to apples, and you think it's better to make that move. But I've actually had customers sometimes too, and here recently, our rates have gone up for some people, and they'll leave, and they actually come back. And I said, what happened? Sometimes they'll go for 6 months. They were only going for that little bit of time, and they had an increase. And then 2, I had some customers leave and come back. Rates didn't go up, but they said this customer service. And that's one thing, I'm going to pat myself on the back. I love helping people. I just want to make sure people know. And I'm really big on, like I said, customer service. Like I said, a lot of people say it, I do it.
Yeah.
And that's what's key.
Are you putting people in insurance? I mean, life insurance as well?
Yeah, I do. See, thank you. Yeah. Well, that's my 1B. I'm glad you said I wasn't thinking about that, but that's my 1B, because when I get people in the home, get their auto, I want them to protect it. I said, CY, cover your assets.
Right.
Cover your assets, because that's key. And even for like home buyers, I want them to get mortgage insurance, because the thing is, people don't think about that. Like I had a guy I was doing a quote for the other day and doing an evaluation. He was a breadwinner.
Right.
I'm doing it in quotes, breadwinner. And what I mean he was a breadwinner was because the wife was a homemaker, but I had to have a hard conversation with him. And when you're talking about life insurance and things of that nature, you have to have some pretty hard conversations.
True.
And when I was talking to him, he said, well, my wife doesn't work. I said, okay, what does she do? Well, she stays home with the kids, blah, blah, blah. He kind of explained. She's a homemaker. I said, okay. She watches the kids. I said, how come you don't have the kids in daycare or anything like that? Well, so much, it's really expensive. I said, about how much? For the 2 kids, it's probably about $4,000 a month for the 2 kids. I said, okay, we're talking roughly about $48,000. I said, okay. I said, what about, after school care? Once again, my wife does that. Add a tack on another, $2,000. So I just kept asking all these different questions and things like that. When you travel, my wife, yada, yada, yada. Make a long story short, when we actually calculated her being a homemaker, although she technically didn't have a salary, her value was almost close to about $150,000, $160,000.
Wow.
And that's the thing people don't think about. Although she doesn't have a salary job, what she does on a day-to-day basis being a homemaker, I said, I'm not trying to be morbid, but just these real conversations you have to have with people. I said, God forbid anything would happen to your wife, but if your wife something were to happen, what are you going to do about that? He said, I didn't think about it like that. So
a lot of people don't think about it like that.
A lot of people don't think about that. And those are the kind of things you have to think about. And then 2, or even if you do have 2 people in a house working, what if one of those salaries, you living in a $700,000, $800,000 house, a lot of times these houses are on joint income. So once again, God forbid something would happen to somebody, that's something you have to take into consideration, because then that salary is gone. If you have younger kids or kids who are in high school, trying to prepare them for college, those are the kind of things you have to be aware of from that standpoint, And then 2, I'm going to talk about this at the next meeting, key man insurance. And what key man insurance is,
business owners
insurance, because you might be the owner, but if you have a couple of employees or someone who are really doing a lot of background work for you, and if they were to go away or something would happen, they get sick,
or pay their partner out to buy the
bingo. So those are some of the things we have to think about, man. From an insurance standpoint, from not only protecting your home but protecting your business, and then having a succession plan as well. And that's one thing I help people with as well, to make sure, if they decide to voluntarily relinquish their business, sell it, whatever, to be prepared from that standpoint. Or like you said, a situation where you might have a partner, like you said, they expire, they pass away or something like that. You have to take those things into consideration, because you don't want to be, of course, you're naturally going to be distraught and sad because they pass, but you don't want to be financially distraught either. That'd be a double whammy from that standpoint also.
Oh, yeah, definitely definitely.
So do you ever talk to any of your customers or your clients about life insurance and stuff like that sometimes?
Well, right now, with being a realtor, is really trying to, once again, help them retain the asset. If something happens, that it could be covered, as well as having a life insurance policy. So, and once again, I'm a consultant too. So I'm always telling people, hey, now you're in the house, you need to make sure you have the appropriate insurance on yourself, your mate, as well as your kids. So that's something else I talk to my clients about, so they don't get too caught up in just owning a home. They got to know, things do happen. These are some other coverage you need to think about. So the educational piece for homeowners is constantly is always there. So the financial literacy is important because people don't know what they don't know.
Right. So, well, Monty, if a family had to choose between building wealth and protecting wealth, what would you tell them?
I would tell them to it's a two-part thing. If they already have it, you want to protect it. If they don't, they want to build it. Home ownership, when you live in a house, you are really accumulating equity, which is equity is money, meaning it's like a CD.
Okay.
And people miss out on that. So if you're renting a house, you made the landlord rich. He's thankful you've been there the whole time.
Okay.
But if you are there your own, you can walk away with that money to do an upscale to the next house. I was listening to a classmate of mine, and he talked about, hey, I bought a house for $90,000. I sold it for $120,000. Me and my wife took that equity, and we went to another house. And I found out, like, oh, I talked to my neighbor, and he said we wanted the same. You know, he said it wasn't melanated, and I took that cash. I went to the next house, and then he said, man, my next house was like $300,000. Me and my wife stayed there. We took their equity, and then we bought us a $500,000 house. And we're on like our fifth or sixth move. Now we're in $1 million house.
Oh, wow. Okay.
Yeah.
Okay.
So
That's awesome.
that's one of my classmates. I was listening to him. He has a FedEx trucking business. He said that's a form of us accumulating wealth. So, yeah.
That's huge. So what's more dangerous, now owning assets or owning assets that aren't protected?
Once again, that's a two-way fold. Owning is always a plus. You know, if you're renting something, I can put you out in 30 days here in Texas. You know, Texas is a landlord friendly state. But when it comes to protecting your asset, you want to make sure you have the right coverage. You want to make sure that stuff is in line, and people don't know what they don't know. So, which is a dire need for constantly consulting your clients once they've been in the house a year. Do a follow up, see where they are. You never know. So, especially in your industry, mine's less frequent unless they're trying to move again or they got a referral. But it's kind of like they may have a child coming, or mine's they may need to do an upgrade or you have to sell. So that's the difference.
And this is something I hear people ask sometimes. Do you believe the American dream has changed, or is home ownership still one of the strongest paths to stability?
It depends on where you live.
Okay. Clarify what you mean about that.
Like when I moved to Texas, home ownership was a lot more affordable. Now Texas is like one of the influx of where everybody's moving. So a lot of Californians have moved here because the dream has become idea for them because they can get something new. But out there, their home does $1 million. Here it looks like it's a $200,000 home.
Oh wow! Okay.
So that's the big difference. But as far as home ownership, the dream for home ownership, it has changed. I think you know people are more accustomed to the life they want to live versus the understanding of passing on generational wealth. They're not living on a biblical principle as far as passing generational wealth onto their children.
That's huge. That's huge. That is huge. Now, what advice would you give to homeowners who are focused on acquiring wealth but haven't taken the proper steps to protect it?
I say talk to a realtors. Go ahead and take a deep dive and just start having a communication. You got to, to get in the game, you got to know where you are. And most people got to shy away and just say, hey, I may not be ready now, but I need to go ahead and go to some home buying seminar class. You got to be informed and know what you're trying to do. Me being at NARAB Dallas or the local chapter here, we do at least 2 or 3 home buying seminars a year, but there's something always going on, a piece as far as educating the community on the importance of home ownership.
So, man, answer this question. I think this is going to be huge for a lot of people out there. You've built a reputation as a broker, entrepreneur, mentor, husband, and father. How has leadership changed your perspective on success?
The point of leadership is that you have to be able to follow in order to lead. Most people feel like, hey, I'm a natural leader. I feel like I was a good follower. I'm always up looking to learn. Leadership is continuous. It's continuous learning, reading, following up, talking to people, networking, building relationship. Us talking, me talking, you, I'm learning. I haven't lived your life. I haven't been with you 24 hours a day. You've been with so many people through the week that just a conversation alone, I've learned something.
So let me ask you this question. I think you kind of talked about this earlier, but what's the biggest misconception of home ownership?
Biggest misconception of home ownership is pretty much people forgot it's attainable.
And with that being said, you've helped many families out there. How has it helped people who thrived when they try and get home ownership as opposed to people who have struggled?
People that struggle, I do property management. And I've seen people that come in a certain way. Anything can be fixed, but where you are in life, there's always a way of getting out of it. You just have to be patient to work toward to get out of that situation. And some people that have the income but not the credit, whatever put them in their credit, it doesn't take much for your credit to drop. And people don't understand that, but it takes work to build towards something that you really want.
And then, you just hit a key thing. You said legacy. What do you think is the key components for people when talking about legacy they need to focus on trying to get there as far as wealth building and things of that magnitude? What are some of the things that you can advise people or not necessarily advise to give advice on from that standpoint?
I'll say is try to live a little bit below your means, so you have extra income to do the things you want to enjoy doing. Most people max out their income trying to impress people that they don't talk to, that they don't deal with, and that won't come over.
Now I'm gonna hit you hard a little bit here. You part of the SWAC. I'm Grambling. You Jackson State. You the little tiger. We the big tiger.
So you say. so you say. Okay.
But what were some of the influences that helped you at Jackson State that have helped you propel you where you are now?
Man, I say coming from Jackson State in the School of Business I took professional development there for like 4 years, and they embedded on us things we need to do that, as I talked to other professionals that attended the university, Jackson State told us always do simple things people miss out on. Make sure you're professionally when you're out, clean shave, always work with your alumni, not just your alumni, other HBCU
yes,
alumni.
Indeed. Yes, indeed.
When things get hard or tough, lean on your alumni. So I say my biggest strength from graduating Jackson State is that that resource itself has been able to, I may be a tiger, a real tiger, the blue tiger, but Graham fam is family.
Yeah. And that's one thing too. I'm kind of, we joke and we kid, but like I said, we talked about that the other day. We were at a meeting. Just met some guys from Prairie View. One person was from, I think, Howard. Somebody was from Hampton. First time meeting. And we had some people from the other persuasion there. They like, y'all seem like y'all knew each other. Y'all know each other? Didn't know them, but I got to tell people, you have your Hampton alumni, you got your Jack State, you got your Rammer, Prairie View, Philander Smith College alumni, Russ College. But when you're HBCU, baby, it's HBCU alumni. It's just continuous. And it's an automatic connection.
We're continuous until we play each other.
Exactly. And then after that, we love each other again.
We pick a side, then we'll come together again.
So Monty, we had we know each other over 20-something years, but from a business standpoint and from a professional standpoint and a personal standpoint, if people were to talk about Monte Brown 20 years from now, what would you think they would say, or what would you want them to say about Monte Brown?
I care about the people too much. I care about the community more than anything. So being involved is something where it's a passion of mine. So I think that'll be my legacy. He was passionate about the community.
Okay.